situation that we saw just now, right? What they did was, they didn't sell the tires, they actually sold the kilometers. What do I mean by that? I meant by saying, you know how much an insurance tire costs, isn't it? Right? Cost the earth. Next to it is Pirelli, right? So, they know that the tire costs a lot of money. So, they said that the pride in that is actually the quality. And the mileage that you can actually earn if you maintain it right. So, that's the big if you maintain it right. So, people are claiming that, forget about Michelin. These guys, they say 60,000, 40,000 I've got to get my tires changed. So, in comes another R&D guy and said, hey, look here, they don't know how to maintain the tires. So that's why they're happening, the cost of changing is actually higher, right? Then another guy came, so what's wrong with that? We make more sales. Is it going to hurt you in the long run or not? You're actually giving a perception that you're cheating your customers, right? It says it can last 100,000 kilometers, it only lasts 60,000 kilometers. Right? So what did they do? They actually did something like called MFS, Michelin Fleet Solutions. Right? What do? They actually offer a service to the biggest customer segment and the ones who are suffering the biggest losses. Who are they? Tire and buses companies, logistic companies. And they're saying, okay, let us maintain the tires for you. We make sure that it lasts that 100,000 kilometers, even if it is blown up. Is it like you hit a puddle, you hit a big ditch and all that, we will replace at that fixed cost. You don't have to get another tire until that 100,000 kilometers is exhausted. Right? So they went downstream, precisely. So they offered a service, right? So the biggest challenge at the point in time was that how do I then turn around my my customers to actually believe to buy something that's in the first time free, right? Outsourced to me. So they started to prove the point about how much saving that you're going to get, right? Because when it comes to tire costs, I don't know how many of you are in the logistics company, and if you're not there, I'm going to lie to you. Okay, now I'm going to lie to you. Now, when it comes to the balance sheet, one thing that is called a contingent liability on the balance sheet of the tire company is breakdown and contingency, right? So they're going to say, hey, book us, pay this fixed fee, zero on your contingency. Is that a value proposition? Right? So over time they build that up, and because of the kind of warranties that they need to do and the kind of things that they're going to say or ask the customer, say, hey, bring in your buses, we need to do this alignment again, regroup, blah blah blah. They need to invest in what is called telematics. Telematics means to actually trace the groove of the tires. Is it going out the way it should and all that? So they bought a telematics company in Brazil. Make sense? Yes. Right? So today, they're one of the largest in the world. They say they're a tire company, but they're not a tire selling company. They're a tire service company. They're not the highest in sales. They're highest in service. Yes.
Firstly, thank you very much, Puan, for the presentation. I have actually a lot of questions about the IA and IFSA.
Sure.
But I have to say it is convincing, especially this Triodos Bank example. But in the context of Malaysia and Islamic banks here and IFSA, and them having to transit towards the new the deposit models.
Right.
My question is, firstly, do you think the customers here in Malaysia are ready for it? Because if I put myself in the shoes of a customer, and if you tell me Mudarabah means I have to bear losses, my question then is, where will my money be invested? And logically, and I've asked the banks, they say, it's like, for example, SMEs and private equities like infrastructure, which are high-risk investments, and I would immediately get cold feet, and I wouldn't do it. So one is from the customer's education perspective. The other issue that I keep thinking about is Islamic banks in Malaysia, and as it is in most countries, are still operating on a dual operating system where they're still competing with conventional banks. So the rates I can't see how they can be any different from conventional banks, because if not, there's going to be customer movement, flow of money. So that's the second concern. The third concern, and my last concern, is, you know, with the investment account, where do banks really invest the money? Because as I said, SMEs and private equities actually require, it's high risk and it requires lock-in period. But the banks, the UA, the unrestricted accounts, you know, it allows for withdrawal. So I can't put the two and two together in my head.
Okay, thank you very much for the questions. I'll answer it one by one. Now, the first one is you say that customer education needs to come in. I would say customer education and bankers need to change their mindset. Because number one, when you actually do a Mudarabah account, and if you look at the way the customers of Triodos Bank just now mentioned, one of the key things that he said was that give the transparency to me, right? If I believe in that cause, if I lose money in that cause, and you give me full transparency that I may lose money on that cause, would you be suffering? Ask yourself that question, right? So secondly, it's actually about when you say about the investment account, are customers ready? I think customers that you have right now are not the same customer that you're targeting in the future, right? If you look at the customer profile just now, is that the customer profile is actually, when it comes to financing, people who believe in certain causes, people who believe in the real economy, right? People who actually do sustainability. How many of you are receiving that customer, right? And on the part of the depositors, are they ethical investors? Do they believe in certain things like sustainability or, you know, the values? How many of them? So you're not servicing the current customer profile, right? This product. Now, when you say that you are competing in the dual financial system, if you are differentiating yourself in terms of customer focus rather than product focus, and what you heard from one medic just now, right? Yeah, you can win on rates. Yeah, you can win on rates. But no, you cannot win if you don't have the relationship. Customer affinity is about knowing your customer, right? So my argument is that you as banker need to learn more about what is it that not the banking world needs, but about what the society needs, right? And SME, so the answer to your question with regard to SME and all these PEs or whatever not, it's not so much it's high risk, but your lack of understanding of such risk. Notice what Triodos said just now. You guys are generalists, that's why you say it's high risk. If you are specialists, I know this risk, it's filming, you need some kind of gas, right? So specialized. That's the answer to your question. Yes.
Thank you very much. Continuation of your answer just now. So, since the enactment of IFTA 2013, do you foresee the Islamic banks in Malaysia introduces the department that will going to have an expertise in the PE or SME?
Well, when it comes to Bank Negara, we already have the department that looks into PE and SME.
Commercial.
Yeah, right? They're not commercial, they're both, right? And we also have, you know, within our own department, I'm part of the team that looks into these new growth areas. So things like creative industry, right? It's no longer SMEs per se, it's like entrepreneur and then sectors, right? So if you're looking at SMEs per se, SME is actually a very broad term. There's a lot of SME. There's growth SME, there's tech SME, there's whatever. It's just to determine a particular size. I don't think it's the right connotation. You should be looking at entrepreneurs. What areas are they looking at? What industry are they looking at? Is it disruptive? Is it going to be the next best thing? Because how many of you are not on LinkedIn? No one puts up their hand except you, right? One is not on LinkedIn, right?
Not on Facebook.
Yeah. And for that, you say, I just don't like tech, isn't it? Right? No Facebook, nothing. Yeah. But social networking you don't like, right? That's not because you don't know about LinkedIn. You do know about LinkedIn, right? A bank helps LinkedIn come on board, right? Dropbox. How many of you keep your pictures up there? Never, right? So this is the kind of thing. Technology, things, real sector participation that actually makes a difference, that actually furthers the envelope. That way, people are saying, oh, okay, it makes sense for you to do that, right? It makes sense for a bank to support something like that. You're part of growth and development. So who's there to say that you're just predatory, right? So the answer is yes. Within the bank, we have that kind of expertise, right? I wouldn't say expertise per se, but we know about how to regulate this kind of. Yeah. You have a question?
A very insightful presentation. Thank you, Puan. In transitioning Islamic Bank in Malaysia from financing based to equity partnership investment based model.
Not quite right. Okay, go on.
What kind of support that we can we expect from regulators' perspective? For all we know, as of now, we have the same set of assessment. Basically, it is based on camels plus some other bits. And
stop using camels a long time ago.
Camels and some plus other assessments areas, and basically what regulators need more capital certainty in terms of liquidities and all that in supporting Islamic banks during the transitions period. What kind of support that we can expect from the regulator?
Okay, thank you for your question. First and foremost, we are not transitioning from financing debt model to equity. As I mentioned right throughout my presentation, is to complement. So there's no such thing as done with debt. No more debt. Debt is bad. No. There is actually a need for debt, right? The transition is not from debt to equity. The transition is actually from a pool that comprises both capital guaranteed and non-capital guaranteed deposits to capital guaranteed in deposits only and non-capital guaranteed in investments only, right? So it's the liability side rather than the asset side. Now, in terms of support, we have given you the investment account framework. We have worked with you in terms of your transition. Some of you know that. You know, your cut-off date has been negotiated, right? We have given you some awareness in terms of how you need to communicate. We've worked with you in terms of the PR and the communication to your own customers, right? And pretty soon, what we're going to do is that we're going to form, for those of you who actually have an investment account unit, a focus group. That particular focus group is going to get full and unrestricted exposure to this kind of new business processes. But the only condition is this: come out with a product, right? No fee rights. Okay?
One last question.
Alright. Yeah.
Thank you very much.
Is it going to be a tough one?
Well, I just came from a crowdfunding forum held
Sure.
by SC.
Sure.
And
Very good, isn't it? I was told it was a very, very good
very
one.
good in the morning.
Yeah.
But they are focused.
Very good in the morning, okay.
Well, I'm here now.
Yeah.
I'll tell you tomorrow. Yeah. What is Bank Negara crowding out crowdfunding? Are they, in the sense that, are they putting a stop on P2P type business?
Yeah.
That's one question.
Yeah.
And the second one, when you talk about debt being relevant still, can't risk sharing along the risk reward spectrum, can't that cover the space that debt is already taking? So can't you have very, very safe risk sharing and very, very risky risk sharing? But it's all risk sharing. Why do you need debt?
Okay. I suppose you're the proponent of I love resharing. It's true. I mean, it's good to reshare, right? But your first question, are we crowding out the equity crowdfunders? The answer is no. Where we see equity crowdfunding, peer-to-peer lending, informal shadow banking, all that jazz, is actually within this two, right? Now, just now I shared that you actually have investment providers, you have loan providers, and you have grants, right? We see that as complementing each other. Now, when it comes to the space of investing, where we see as a gap is actually there is no banking product that allows you to invest in a business for those who actually have some kind of apprehension about risk. Right? Because in equity crowdfunding, one thing is for sure, you're all on your own. Right? There is a platform, you look at it yourself, you assess it yourself, all the information is there, you do the decision. There's no intermediary for you. Right? Whereas when it comes to investment account, the bank does the business plan for you just now. Right? The bank evaluates for you, hey, look here, this is actually the kind of risk that this kind of customers would face. Right? And you may lose this much investment price. What is the worst case scenario? Is this much. Right? So it's actually somewhere in between the picture that I showed about risk transfer and risk, complete risk transfer and complete risk assumption. Right? Because there is actually a limit to certain models, and that is actually acknowledged by even OECD. Right? And then the third thing that you asked was that can a risk sharing instrument be structured in such a way that it can replace debt? My answer is anything is possible, provided there's a demand for it, and you need to create a demand. Right? If I provide finance and that financing actually defaults, and the back end of it, which is actually my depositors, are not going to make any claim on it, and it's still a provision of finance, so it's actually an investment account. Right? You can actually provide finance using an investment account modality. It's possible. Okay. And what's even better in that kind of circumstances is that there's no capital charge. Right? So your Basel 3 and all those stuff that you're thinking of is not going to apply. Why? Because at the intermediary stage, you're using investment account for the investment, and that investment is used for provision of finance. Right? So it's a direct tagging. I'm giving you full visibility that I'm lending to the sector. Right? If you lose your share. Right? But I will make sure that all the mitigants are in place. Even then, you may still lose your share. Right?
Which can happen with debt as well.
It can happen. So it is possible. Yeah. Okay. Is that the last question? So I've used up my time. Okay. Thank you very much.
Thank you, Ms. Azleena. Thanks a lot.